Welcome back to Tough Finance, where we dissect financial strategies that are as risky as they are ridiculous. Today we're diving into Buy, Borrow, Die. Sounds like a plot for a low-budget horror movie, right? Spoiler, it is. But instead of zombies you get billionaires, skipping taxes, leveraging debt and leaving you behind with W2 and trust issues. Part 1. The Dream, aka The Lie. Let's talk about the dream. The hype goes like this: buy assets, borrow against them and die before the IRS catches on. It's like a financial version of Eat, Pray, Low, but with more leverage and less enlightenment. They tell you it's the smartest wealth hack in the world, but they leave out one small detail: you're not rich enough to survive it. Part 2. How Buy, Borrow, Die actually works. Let's break it down like your accountant never will. Buy. You buy appreciating assets, stocks, real estate, private equity. These go up in value, but you don't sell. Why? Because selling equals taxes. You just hold. Your wealth grows on paper, untouched. You look poor. The IRS yawns. You're worth millions, but because you didn't earn it, Uncle Sam can't touch it. Cute, right? Borrow. Now you need money to live. Instead of selling assets, you borrow against them. Stocks as collateral. Get a low interest loan. No taxes, no gain, no problem. You get liquid without creating a taxable event. That 5 million portfolio just became 2 million loan. Tax free, interest deductible and fully spendable. You bought a yacht, the IRS still asleep. Die. Here's the magic trick: when you die, your heir gets assets as step up in basis, meaning that 5 million stock you bought for 1 million, now it's worth 5 million and taxed like it was purchased yesterday. The gains vanish, the IRA loses, your kids win. You're dead, but your family trust lives on, tax free and smiling. Part 3. When the dream collapses for you. Now let's say you try this. You buy some stocks, you borrow against them, the market crashes, your portfolio drops 40%. Guess what? You still owe the loan. The bank wants their money, the IRS might want theirs too, and you're suddenly underwater, over leveraged and spiritually bankrupt. Buy, borrow, cry. You're not playing 5D chess, you're playing Russian roulette with adjustable interest. Part 4. Bitter wisdom. Here's the truth no guru wants to tell you: buy, borrow, die isn't a strategy, it's a luxury. A rich can afford to play this game because they have enough assets to survive downturns, enough lawyers to navigate complexity, enough accountants to dodge landmines. You have a TurboTax login and a dream. If you try this without a war chest and the will, you're not optimizing, you're gambling on your death date. You're not a wealth architect, you're just hoping you die before the margin call hits. And that's your financial horror story for today. Buy, borrow, die, the legal cheat code you can't afford to play. If this therapy session with teeth hit home, hit subscribe. Meanwhile, stay cynical, stay solvent, and never take tax advice from someone selling a course.